first webcast of Governance Dialogues presented by Governance Center. Governance Dialogues is a program that I will be hosting on a weekly basis, offering curated weekly episodes on issues of priority on economic and corporate governance, presented in an informal yet hard-hitting setting with thought leaders. Governance Dialogues is a brainchild of our think tank and advisory center, aiming to engage with the global audience at a time when interest in governance is peaking, yet the understanding of how it can actually help policymakers and corporate boards and executives is actually, in our view, the missing link. And we see this in our work with our clients, but also all over the financial press as we're watching stories of NMC, of Luckin Coffee, and many other governance scandals and fiascos unravel on the front pages of the financial press. And we believe that the current economic context, characterized by unprecedented economic recession, as well as social context, where we see quite a bit of loss of faith in governments, but also corporations, offers a unique opportunity to look at governance and to think about what is it really and what can it offer the policymakers and senior executives as they navigate the current crisis, but also as they navigate the transition from what has been widely discussed in the press, the transition from the shareholder model to the stakeholder model, and how realistic is that transition? So some hard questions to be asked around that. And these specific observations actually gave us the idea of launching this program to give you, our global audience, the possibility to engage and to have an insider perspective into corporate boardrooms and into the tough decisions facing policymakers today as they navigate this crisis. My name is Alisa Cole, and I'm the Managing Director of Governance Center. And today, I'm delighted to host Sunil Mehta, who, among his multiple other roles, is the chairman of Yes Bank. And Yes Bank is a very interesting story for those of you who have not been following, that's been unraveling in the press for about 2 months now. And I think the reason that I thought to invite Sunil to join this program, this first episode of Governance Dialogues today, is precisely because he's been weathering a storm within a storm. And that is navigating and overseeing the restructuring of a very complicated situation of one of the largest India's banks at a time when the COVID crisis is wreaking havoc in all sectors, and naturally, of course, in the banking sector as well, and in India as well. So we're focused today on a situation that is a little bit of a storm within a storm, and I think it would give us a unique perspective into some of the challenges that boards today face, and particularly the board of Yes Bank. I had the pleasure to meet Sunil about a year ago at a conference where I was moderating a panel in Spain. And we'll have the pleasure to join again forces in a virtual conference in a couple of months' time, looking at the future of India's economy today, 1 year from when we first met, in a very, very different context. Sunil has been asked to assume the leadership of Yes Bank as a non-executive chairman, and he's currently navigating one of the most complicated governance transformations that is possibly taking place in the world today. Which is a testimony of the enormous trust that the Indian government and the Reserve Bank of India has placed in him. And I think it is also no wonder. Sunil has over 40 years of fascinating experience leading financial institutions from AIG to Citibank to the State Bank of India and many others. And we're here today to explore some of this experience with you, Sunil, today. So welcome to Governance Dialogues. How are you?
Alisa, good morning, and a real treat to see you after a considerable time when we last met in Segovia in Spain. A real pleasure to be with you this morning.
Thank you so much. Pleasure to have you, and we appreciate you taking time out of your busy schedule to share your thoughts as to how this transition is actually occurring and what are some of the challenges that you're experiencing. And for those of you who have not been following the Yes Bank unraveling in the news, perhaps I'll say a few words about the story or the foundations of the story, and our Sunil will be sharing, of course, more details from on the ground, so to speak. So Yes Bank, the story of Yes Bank has actually started to unravel about 2 months ago, all over the pages of the financial press, with the arrest of the CEO, Rana Kapoor, and a moratorium that was placed on the bank by the Reserve Bank of India. The slide of the shares, the incredible slide of the shares lost about 90% year to year, and obviously the stepping in of the Reserve Bank of India to restructure the bank, which led to a first ever bank-led reconstruction in India's history, led by one of the largest public sector banks, the State Bank of India, but also four private sector banks, which is a very unusual transaction, if I understood correctly from our conversations with you, Sunil. And you were appointed to spearhead this transition and to oversee a very complicated governance restructuring story. Let me get to the first question that I'd like to ask you today. I think what is fascinating about this case is that the story of the bank today stands in huge and stark contrast to the beginnings, which were very ambitious. In 2003, Rana Kapoor received a first private sector license in a generation to open a bank in India. In 2005, the bank was listed on the Bombay Stock Exchange with enormous enthusiasm and hope. And yet, fast forward to 2 months ago, CEO was arrested, shares were sliding, and India's finance minister, and I quote, said that governance issues in Yes Bank were of serious nature. There was wrong asset classification and risky credit issuing habits. Sunil, let me turn to you and ask you, what were, in your view, the most serious governance challenges that you observed as you took over the bank? And why did it take the RBI or the regulators so long, or the time it took to step in and take over the bank, change its board, et cetera, et cetera? Please.
Thank you. Alisa, first of all, the last 2 months it seems it's actually been about 2 years. It looks as if so much has happened over the last 2 months and we've seen not just the economic situation that preceded the announcement for the reconstruction of Yes Bank, but also the overlay of the COVID-19. So this is like actually dealing with a triple Sunday with layers and layers of complexities that need to be dealt with at Yes Bank. The point that you first made on the why did it take so long for the regulators to precipitate and take action, I think the bank was in the close oversight of the regulators for a considerable time. There had been a change of the promoter CEO in early 2019, and a professional CEO was inducted. The problem that he faced was to raise capital because the assets that had been put on in the bank had started sort of turning into a difficult situation on the total amount of assets that were there, number one. And number two, they were impairing at a very rapid pace. So well, he was not able to raise capital, and the situation was deteriorating rapidly. And hence the regulator took some very decisive action, including the Ministry of Finance, to supersede the earlier board, announce the appointment of an administrator during this period of moratorium, and then for a new board to be appointed effective March 26, 2020. So the steps that were precipitated by the restructuring program were complicated. Number one, when the moratorium was imposed, it was quite obvious that there was some concern amongst the depositors about what they would be able to do with and how they could withdraw their money. Secondly, in terms of the entire reclassification of the bad assets that were there. The Reserve Bank of India gave us a line of liquidity which was very helpful. The moratorium was lifted. And since then, I think one of the most encouraging pieces have been that the retail depositors have stayed put. There has been hardly any depletion of retail deposits. Yes, there was a depletion of some of the institutional deposits, but I think the liquidity situation is perhaps much more stable now than what we had anticipated in the beginning of this period. Coming to the point on governance, I think there were many issues that related to governance issues that the bank faced in the past, and there were issues relating to the decision on how rapidly the bank had grown, the quality of the assets, and also the concentration of some of the large credits in the bank itself on the corporate side of the portfolio. Now, it's quite obvious that when you have an iconic CEO, and that also a promoter CEO over the number of years that this bank had, some of the decisions do get centralized. And the board sort of could have taken far more decisive steps in guiding and supervising some of the actions of the management. But that is now water under the bridge. So we need to sort of look forward and see exactly how this new board needs to actually move into new governance practices. And that is what we are attempting to do now.
Thank you, Sunil. That's fascinating. In fact, in terms of the timeline, to enlighten our audience, in fact, the new board, as far as I remember in our conversations, the new board has been appointed quite recently on March 26th, as well as the new CEO to replace Rana Kapoor. And you know, this issue that you raise is very interesting. One of sort of an all-powerful CEO. I've given a number of interviews and commentary also on this, which is a phenomenon that we see, of course, all over the world in many corporations, and which makes governance all that much more difficult to reform in the midst or after such a departure. A departure of such a CEO. And I want to ask you, as a chairman, taking into account these difficult transitions with a new CEO, new board coming in, may I ask you, what were the few first reflexes in dealing with sort of restructuring the governance? Where do you start? Is it, at the level of board committees? Is it at the level of reshuffling the philosophy of the board? Can you tell us sort of your first, 100 days in action, modus operandi for taking over the board?
Fortunately, we have not completed 100 days, so we're still less than that, but I think it appears to be a much longer period. But I think, Alisa, in all seriousness, the first priority is to really understand the problem, is to dimension what the key issues are, and then for the board to sit down and work closely with the new CEO and the management team, and to start working and developing a partnership and a construct that is far more transparent, far more engaging, and you have to understand the details of what are the first issues that we need to address. If liquidity is the most important issue, we address liquidity. How do we deal with liquidity? How do we get more liquidity into the bank? The second issue is, if we need to get more capital, then you start working on a capital plan. But to develop a capital plan, you need a strategy, a board strategy, which has to be worked in partnership with the management, because no new capital will come unless there is clarity of what should be a strategic direction of the board, and why would any new investor come in if they do not see upsides and growth. So you have to segregate the challenges, you have to put them aside, deal with those challenges in a manner that does not in any way come in the way of looking at the future growth of the bank. And that is exactly what we've been doing over the last 2 odd months, is to dimension the problem, look at all the bad assets, start dealing with the bad asset portfolio, looking at the liquidity issues, giving confidence to the public that they need to be far more comfortable because we have the backing of the uh, five very prestigious banks and, of course, the Reserve Bank of India. And there is no question about it that from here on, as far as the stability is concerned, that is taken care of. But really now it's dimensioning on governance and a growth strategy that is very critical to induct new investors who will want to come into this and participate in the upsides of the bank.
It's interesting. You mentioned one point which I would like to dwell on a little bit further in this conversation, and that is the complexity involved. Given that there are 5 different institutions with perhaps slightly diverging interests involved in this, and there was one article which was sort of ironic in its title in the press that appeared in Bloomberg. I think it said, "In the end, it took a whole village to rescue a bank," and obviously, you know, one of the challenges that you're navigating is aligning these very different interests in the context of the board, but also aligning the interests of the board with the management. Could you say a few words about, you know, how you are navigating that challenge?
You know, I think I have a little bit of an advantage here that I was on the board of State Bank of India for a few years, several years ago. And with State Bank of India now stepping in as a 49% stakeholder along with the other banks, the engagement with the new stakeholders has been absolutely so important because you need to understand the stakeholders' expectations on how they believe that the bank should be working to ensure that the whatever investment that they have put in needs to be protected. And obviously, we need to nurture it and make it grow from here. So the engagement with stakeholders is very important for the bank, for the board, and for the chairman, and for the CEO also to keep them informed of the developments that are taking place in the bank. Number 2, it is also equally critical that the regulators are kept informed of how we are progressing, because at the end of the day, the confidence of the regulators is also equally critical in ensuring that the support that they have extended, the line of liquidity and the confidence that they have imposed on the bank, we should be sort of discharging our fiduciary responsibility towards that. Thirdly, it is the other key constituent for us is our customers and our depositors. So engaging and communicating effectively by the management with our customers, both corporate and retail, becomes an absolute imperative. And lastly, is also communicating with the employees, which is probably one of the more important issues, because without the team and without the management really putting its best foot forward and ensuring that they are not really distracted by all that has gone in the past, and they're driving the car by looking at the windscreen and not the rear view mirror, is what is absolutely important. And that confidence of the employees, that they believe that there is a vision which has been developed by the board and the management, and that strategy that is now getting articulated, which will be with milestones, with clear milestones, which is what the management would work towards in delivering, and that will be ultimately delivering to all the key stakeholders of the bank.
Mm-hmm. You know, I would like to go back to one point that you just that you were making in your comments, and focusing on employees, because in fact this is an area of discussion, obviously worldwide. These last 3 days, I've been also participating in Financial Times boardroom conference, which is obviously taking place under the current conditions online. And there are some fascinating conversations there, in particularly on ESG, so on economic, environmental, social governance, and how that concept is being reshuffled or rethought in the current pandemic. And India's context specifically, I think it's also a very interesting area to explore. How are companies able to treat their employees in this crisis, especially given that, you know, much of India's economy is informal, but even in the formal sector, you know, are enterprises really focusing on the S? Are they really focusing on keeping their employees sort of supported through this crisis from a healthcare, from salary and benefits perspectives, and many others. And we've seen that unraveling in many other economies. You know, in the US, in the first 2 weeks of the pandemic, there were 10 million unemployment claims filed, which was equivalent to basically the population of the entire New York City, which means the companies were essentially laying off people quite liberally. And to come back to India's contents, I think there was an interesting article in the Financial Times by one of India's prominent writers, Arundhati Roy, which came out on 3rd of April, where she talked about the plight of people from the capital to their villages when the COVID lockdown was announced. And I think, you know, it's a very touching story, but also as a chairman from a corporate perspective, how do you see that unraveling in India at Yes Bank, and perhaps more generally? Are companies, you know, stepping up to care for their employees, and how are they doing so in this new context?
You really hit the chord. I think the issue relating to the employees within the entire ESG piece is so critical. This is unusual. The whole situation that we are facing has been so unexpected that no one really, when it sort of, when the lockdown started, no one really knew, number one, how long it is going to be and what is going to be the impact on the business, the people, health issues. And there was obviously a lot of concern, but also a lack of information. I think the important piece for any board, and for our board as well, has been, and in our case, it was a bit more complicated because we were already having our headwinds when the reconstruction plan was announced by the government. So it was so critical to engage with the employees. The first piece is to take care of the employees' wellness and their health concerns, make sure that they're safe, taking care of their families, and that all the other pieces that need to be dealt with in terms of logistics, because, you know, banking comes under the essential services. So you do have to run your branches, you do have to run banking, albeit at sort of limited number of hours per day. But these are very responsible and onerous duties of the banking system to discharge towards its customers. So the second piece is really giving them confidence that we will get through this period, both from a personal health perspective and also from the economic impact perspective. And that confidence is essential, because that gives you the optimism that you're sort of going to move into the world post-COVID, which in any case is going to be the new normal of a COVID situation existing there. But how do we deal with that? So there needs to be a lot of clarity provided to the management team, to the employees, and a lot of communication that needs to be there on a continuous basis. And lastly, they also have to see what life is going to be for them as we sort of move towards out of this COVID situation into what is going to be the new normal. How are we going to deal with, engage with customers with limitations that we have? Are we going to move towards a digital banking system, a far more digitalized arena? And, you know, having gone through the 2008 crisis, when the crisis is in front of you, you know the depth of the crisis, but you don't know how long that crisis is going to be. And that is really, again, an important piece for the board to sort of start doing a scenario analysis and then sort of developing a strategy for the bank. In a situation like this, I'll just complete, in a situation like this, the important thing also is for everybody to understand that as we come out of this crisis, that is the important opportunity, or that is the opportunity for all of us to really be seen as leaders in the system rather than laggards from the system. So there's a lot to be done here, but the employees will play an exceedingly important role as we move forward.
It's interesting, and also I second your comments about difficulty of forecasting. You know, again, I was watching yesterday's conversation, FT's Global Boardroom Conference, where the head of the Swedish pension fund was basically commenting, saying that she doesn't think that forecasts beyond the next 2 quarters make any sense, because there are so much known unknowns, unknown knowns, and unknown unknowns that currently it's very difficult to have any meaningful conversation about forecasting, and naturally that makes your life or the life of any banker all the more challenging. Let me, if I may, perhaps ask you one last question in this conversation, as we are a little bit limited in time. On your perspectives, sort of a big picture question: do you think that this crisis that we're trespassing is really a black swan event, and what might be some of the key lessons learned, or the impact on the global governance rules of the game? Will they be fundamentally changing? Will it be a fine-tuning, as we saw after the last financial crisis? What are your thoughts that you might be wishing to share with our global audience on that front?
The answer to this question will take longer than the time that we have, but I'll try my best to answer this. It is a black swan event. It is an event that this generation, we hope this generation never faces again. But it is a time to also make some very important changes. We spoke about ESG. There's no doubt that is so relevant today. But we also have to look at the way our governance standards are going to be as we move forward. The risks relating to businesses have changed. We have to accept that now uncertainty is part of the new dimension of running the business. And like you mentioned, that somebody was not willing to forecast more than 2 quarters. But, you know, that's not the way that we can run business. We do have to do scenario planning. We have to be prepared if businesses don't move up as fast as possible. What is the plan B and what is the plan C thereafter? So I think the important thing is that our entire governance edifice is going to undergo a big change here. We have to look at all our stakeholders. We have to look at what are the new risks, dimension all of those, and then sort of come up with what could be different strategies. The board can no longer look at a 5-year strategy and a 3-year strategy and be very happy that we have that. We need to sort of look at it quarter by quarter and be able to adapt to changes. And we must accept that whatever strategy we had in the previous quarter, if it requires to be changed, so be it. Number 2, what worries me most, Alisa, is that our global institutional infrastructure needs to be completely revamped. Our entire way the regulatory architecture is, that needs to be looked at. We are now sort of creating boundaries and are creating barriers and walls all over the world. We're looking internally. And I do hope that nations do get together and look at what needs to be new standards. Bretton Woods, is it relevant? Maybe, maybe not. Maybe we need to come up with new standards today. But if the world is going to get far more polarized and far more inwardly looking, I'm afraid some of those global collaboration that is required will probably be far more challenging to set what should be the new global order looking forward. And I think it's institutions like yours and many other institutions need to be far more vocal in bringing out these issues and kind of helping come out with new solutions to what would be new governance standards. I'll give you an example. Take the element of the auditing standards on going concern. with whatever has happened under COVID-19, almost every auditor must be sort of questioning the ability of that company that they're auditing on their going concern issues and raising those. When you raise those going concern issues based on international auditing standards, what was seen in the past, which investor is going to start investing in these companies? So I think there's a lot of issues that need to be addressed, and governance is going to be central to all of it. And I do wish you and your colleagues in your institution all the very best, because there's so much of potential to work on new global governance standards.
Thank you, Sunil. I obviously second your opinion, and also your comments about the global infrastructure to address the crisis from a regulatory point of view. We're engaging, obviously, with the regulators on a number of issues. Materiality, going concern are obviously top of mind for quite a number of them. And we will be exploring in future episodes, we'll be taking a different look at governance from a more philosophical point of view, from a more regulatory point of view, from a more of an international international institutional infrastructure point of view that you referred to. Are international institutions currently equipped to answer some of these tough questions? But I'm afraid today we will not be able to answer all of those questions, as time has run out for this particular governance dialogue. I would like to thank our audience for tuning in and for joining us for this fascinating conversation with Sunil Mehta. We hope you enjoyed it as much as we did. The episode will be available on the website of Governance Center, but also through our dedicated YouTube channel. And we invite you to share and engage with the content and write to us at inquiries@govern.center with any questions or thoughts you may have for these dialogues that we may be able to explore in future conversations with thought leaders. And our next episode will be joined by Hui Chen, who is an internationally renowned expert in ethics and compliance, and the first ever compliance counsel of the United States Department of Justice, responsible for investigating compliance and corruption breaches at major corporations. So that, I think, will be a fascinating conversation, a little bit of a different tone than the one we had today. But I would like to thank once again Sunil for joining us and for sharing your fascinating experience navigating the challenging situation at Yes Bank currently. And congratulations on the work that you've done so far.
Thank you, Elisa. It's been a real pleasure and a treat to be with you this morning. And hopefully the next meeting may not be virtual. We hope the world is back to some degree of normality, and we'll be able to travel and connect either in India or in Portugal, as you probably indicated in one of your earlier messages.
Thank you, Sunil. And thank you for everyone for joining into Governance Dialogues. We look forward to continue this conversation with you.